home buyers and people getting dropped from their existing coverage have had a tough time finding homeowners insurance in California this summer, as more and more major insurers stop writing policies in the state. Let's get started. I'm Shane Gillen, where I help you live your best life in Newport Beach. State lawmakers recently spent several weeks trying to piece together a deal that would make it easier for insurers to charge higher prices, in hopes of enticing carriers to reopen for new business. As the clock struck midnight on Monday the 11th, making the final deadline for introducing a new bill to be voted on before Thursday's close of the legislative session, a deal had failed to materialize. But major changes to the state's current regulatory regime could still come this year, whether by action from Governor Gavin Newsom or more directly from Insurance Commissioner Ricardo Lara, who oversees the state's insurance regulatory system. The Assembly will also hold more meetings on the topic this fall, which could set the stage for legislative change next year. The proposal would have involved concessions to insurers on sticking point issues, like catastrophic modeling and reinsurance costs, while also generally requiring insurance companies to stay in the market with some caveats. Since the beginning of the year, more than half of the insurers representing California's $12 billion home insurance market have limited or stopped writing policies. State Farm, Allstate, and USAA have effectively closed for new business. Farmers has put a cap on the number of new policies it will write each month, and Travelers and Nationwide have put new restrictions in place that make it more difficult for new customers to qualify for policies. Companies say that state regulators won't allow them to raise rates high enough to keep pace with increasing costs and risks. Many have filed requests for double-digit increases in the rates that they charge homeowners. Consumer Watchdog is advocating for changes to insurance regulations in California, specifically targeting rules enacted by U.S. Representative John Garamendi, who was the first insurance commissioner. One rule prohibits insurance companies from including reinsurance fees in new rate requests, while another mandates the use of past loss data rather than forward-looking fire models when assessing risks from hazards like wildfires. Consumer Watchdog argues that allowing insurers to pass along reinsurance costs can lead to an unregulated market and potential conflicts of interest, as many insurance and reinsurance companies are connected entities. They also contend that forward-looking models could result in opaque, unverifiable pricing algorithms. While the insurance commissioner has the authority to propose regulation changes, implementing them would take time, potentially leaving consumers without affordable insurance options for an extended period. Now, if you want to continue learning more and stay up to date on California's ever-changing rules, regulations, and laws, then click on the screen now, where I'll dig deeper into the topic and provide some useful tools that'll help you live your best life in Newport Beach. Click on it now, and I'll see you there.